Good afternoon, everybody. This is Mark. We're back here for the daily recap. It's Monday, going into Fed meeting on Wednesday, really, which is really the key news for the week, and I believe the key catalyst for the week. So the spiders were all over this place pre-market. Early on, we got hit pretty good, nothing crazy, around 100 plus. And you had a lot of high beta, as we were talking about, that broke the 21-day moving average that, almost hit the 50-day, some of them. And then you had definitely had a little bit of a rally, and you had some buyers coming in full force. It was a slow rally, and really we picked up right at the end of the day, albeit the last 20 minutes of the day. But that's sort of how these things move at this point in time. And overall, it created a beginning of a bearish day to, in my opinion, I wouldn't be surprised. I'm still pretty bearish overall in the general tape based on what I'm seeing technically, but I think short term you can get a bounce. I mean, the oscillator's been at level 70, which historically is a bounce, should happen. And now we got some technical patterns coming on in individual stocks that tell me that could be the case. So again, it could be short-lived until the Fed, but let's see what happens. So some of the high beta, as I said, you got to move early down, and you're talking, you got big gyrations. They were down $10, some of these things, and Google hit its, as you can see, it hit its 50-day and bounced right from there and closed really strong right to its 21-day. So at this point, it might just get stopping there, or we could be in for the Santa Claus rally that's going to make us, that's going to go to new highs. Amazon basically filled that gap, but it went down early. That was a wild one. I know I actually made money short it, but it was strong early on, went negative with the market, and then obviously recovered very quickly. That, again, not as negative as it was the day before, but it stopped at the 21-day. Facebook really hasn't been doing much, but it did hold its 50-day and right back to its 21-day. So you can see we're sort of stuck in between these ranges that, quite frankly, it's not the sexiest thing in the world, but the fact is we're getting into the Fed. I'm not surprised that things are recovering. Some of the high beta that really has been strong all year have recovered. Now, one of the things I've noticed, and I actually noticed, I probably should have noticed it maybe a week ago, HYG, the spiders are following that pretty much toe-to-toe. And again, it's the high yield, it's the iShares for the high yield, and you can just basically trade the bonds. Just keep an eye on it. It's something that I think people have to look at from a day-to-day point of view now. Every once in a while we have this dislocation where you have to follow an ETF, an indice that the spiders follow toe-to-toe, and this seems like that's the one right now. It's only going to be short-lived most likely because that's how these things last, but for the time being, keep it on the radar for us across the board. Other ones, NFLX had a little bit of a bounce also. Fine, almost touched its 50-day, back to its 21-day. It seems if you notice a pattern here, it's because there is one. Microsoft closed actually pretty strong. Overall, the pattern's fine, totally intact. It's actually above its 8-day, which is probably the strongest thing you want to see. I traded a little bit today. I did not hold it across the board. Banks still struggling. Not really anything there. We'll have to see if they can try to rally. Here's Citigroup, here's Goldman. They're basically all at the low end of the range, so try not to overly concentrate on them. OIH, a little rally today. You could see in that pattern, a little bit green day. Still not thinking there's a whole lot compelling there because just based on 35 print early this morning, got a little above that. But overall, not a lot to talk about in that, except the fact that it's basically hijacking this market a little bit. So that's where we're at. I don't think you got to overcomplicate things. I mean, my Under Armour, my Nike retailers I look at aren't looking that healthy. That's Under Armour. That's Nike. So some of the Chinese stocks, Wuba I think is one of the stronger ones that I'm seeing technically. Maybe we can look for an entry price. But I'm not in the entry. Right now I'm in trading mode, and I think that's where we have to be. We'll have to see how we open tomorrow, if we get an opportunity to buy, or if we get a little bit of gap up to obviously, possibly take trades. We'll have to wait and see. I'm not really sure. The VIX, the VXX, definitely gave back some of Friday's move, and you could just see VIX also, elevated levels at 20, I think almost 26. Back down the 22 level. So I don't know if there's panic in the air, but overall we'll have to wait and see how this market reacts. So stay tuned tomorrow. I think we're going to, you're going to get a little action into the Fed, and then Fed Day, I think, where the fireworks really will play out. We'll have to see how we're reacting into that to see if there's something we can sort of try to hang our hat on and say, okay, this is what we should be looking for. Hopefully, you had a good day. It was definitely a good day on the VTF. A lot of guys were very spoke pretty nicely and really talked about their ideas pre things happening. And I think that's the key to the VTF overall. So good job. I will see you all tomorrow.